touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Chan, you're watching Indian Open. Let's go straight to the headlines. Donald Trump smokes the peace pipe after he receives a beautiful letter from Xi Jinping, says a deal is still possible. HCL Tech's profit meets estimates in the fourth quarter. The tech giant guides for 14 to 16% revenue growth in FY20, higher than peers. Three heavyweights, State Bank of India, Larsen & Toubro and iShares will come out with their fourth quarter numbers today. And Mukesh Ambani adds a new toy to his collection. Reliance Retail buys Hamleys for 620 crores in an all-cash deal. And former Finance Minister P. Chidambaram says BJP will lose at least 60 seats outside Uttar Pradesh in North India. Well, I must say, PC's been on a rampage on Twitter as well. He's been talking about how the Congress is ahead after phase 4 and phase 5. Elections, I tell you, that is what is driving all the sentiment in the market currently. However, let's take a look at the trade setup for the day outside of India as well. You can argue that the US markets ended in the red and therefore the sentiment would be negative. And frankly, if you look at how the week is shaping up for the US markets, you would believe that it's looking all gloomy because the S&P is poised for its worst week since before Christmas. And that speaks volumes about the kind of cuts that have come in thus far for the US markets. But then you look at what's happening in Asia this morning and you would see a completely contrasting picture. And that is because of what our headline stated. A beautiful letter that Donald Trump has received from Xi Jinping and talking about how a deal is still possible. I tell you, the gyrations that have come out in the world markets as a result of a tweet or a message from Donald Trump have been unparalleled compared to anything that we've seen in the last 2 months at least. Yes, we know that his comments move the markets, but this week has been particularly eye-popping. So the world markets, at least the Asian markets, are looking fairly buoyant right now. And the SGX Nifty, which has been under pressure for the last 2 or 3 days, and in large part due to our own reasons, is also looking like starting off marginally in the green. So maybe we'll have a start, which is okay. I think most traders are still bracing themselves for some more pain though, because everybody's now talking about levels at which the next supports lie. Most traders are advising staying on the sidelines and watching out for the lower levels for individual stocks as well, by the way, because if the market goes down, then there's no point in trying to be a braveheart and going out and buying something. But the levels are way far below. I mean, if you look at the March 25th low, which we had clocked in, or for that matter, the 89-day EMA, they are at levels which are substantially lower than the current levels, at least the March 25 low of 11,311 or the 11,260, which is the key support. And that is something that people are watching out for before we reach the 100-day moving average, which is 11111. So let's wait and watch if we indeed go down to those levels or no. And I think what traders will keep in mind more specifically today would be that because of the global news that have come out, what the US markets do later on could have a big bearing on what we do on Monday morning in our markets as well. We've sold off quite a bit. If the US markets were to do much better, then maybe short positions will have to face an intraday pullback on Monday morning. So that all of these factors would be in the minds of the markets when they're going out and trading today during the course of the day and towards the close of day today. Flows, however, continue to be negative. FIs continue to sell 655 crores, I think northwards of 26 or 2800 crores in the month of May thus far. DIs have bought in about 677, but by and large, there is an outflow from the FI side. So difficult to comprehend what the trade pattern will look like. I don't try to do that any which ways. It's just too difficult a call to make for anybody, I would presume. But we can talk about stocks that could possibly show reactions in the session today. So there are 3 or 4 names which are very important from today's perspective. Firstly, I want to point out Voltas because the stock has gotten beaten down quite a bit, but the numbers were not the best. Net profit down 27%. EBITDA down 43%, margins at 7% versus 12.4%. You could argue that some of this was as per what the management was guiding towards and what the market was thinking it will do, because the stock had corrected quite a bit. However, I would presume that these numbers wouldn't enthuse a buyer to come out and buy. So keep that at the back of your mind. Asian Paints, and that's an interesting one too. The Kotak Institutional Equities report speaks about what the management said post the numbers too. So the management has suggested an uncertain demand outlook, and the market does not like uncertainty in companies which are expensive. Asian Paints is expensive. So the management has been uncertain about the demand outlook. They have cut the FY20 and 21 EPS forecast by 10 to 11%, and that's pretty steep for an Asian Paints. We just talked about an earnings downgrade, not a P multiple downgrade. Couple that up with maybe multiple downgrades that could come in for the consumption space at large, and maybe, just maybe, you're looking at some more downside. Let's wait and watch if that comes about in Asian Paints or no. Was down yesterday. Let's see if there is follow through on that call today's session. Shankara Building Products. It was a weak Q4 optically. The net profit fell 92% to 1.6 crores from 21.6 crores. But I dare say, do stay tuned to this broadcast, because Somit will be joining us a bit later on to tell us why these numbers there are some silver linings in this number too. So optically looks very bad set of numbers. Let's wait and watch what happens to Shankara Buildcon in the session today. And Welspun Corp is the other interesting one. They are going to consider a share buyback proposal on May 14. It's a stock that's done remarkably well in the run-up to this board meet as well. Let's wait and watch what it does on the back of this announcement. I just want to end trade setup with a special mention of HCL Technologies. It was important, I believe, from an IT sentiment perspective for HCL Tech and Tech Mahindra to come out with good numbers and good guidance. I would presume that HCL Tech has part managed to do that. The revenues were up 3.5% quarter-on-quarter basis, which was much higher than what a lot of street estimates were working with. So that is part one. EBITDA and profits were okay. EBITDA, actually, there was a small miss. But the point is, HCL Tech has guided to a fairly strong constant currency growth for FY20. The guidance is at 14 to 16%. That's nothing to scoff at, to be honest, compared to what all the other IT companies have done. And therefore, maybe you would argue that what HCL Tech has done in the run-up to its results is warranted. It's nudged fresh lifetime highs, has held out reasonably well, maybe with reason. This is fairly strong constant currency growth guidance. And off late, HCL Tech has managed to meet the guidance numbers that it has given out. So I would presume that the street would take these numbers positively. It's a large name. It's an IT company, large IT company, nifty company, and could be interesting to see what this one does in the session today. It may not have the wherewithal to drive up the sentiment in the entire IT space. That's what TCS does. But important set of numbers should augur well for the stock in the session today. Let's wait and watch. Okay, that's the trade setup. Let's talk about the key items on First Word today. Trade tensions, subdued earnings, and elections weighing on markets in May. Darshan Mehta will tell us how bad the hit is. SBI is expected to return to profits in the fourth quarter, but Shif Ali Malik will tell us about the crucial items which could still weigh in. Shankara Building's earnings take a severe hit in the fourth quarter, but it may not be as worrying as it seems. Somit Sarkar will tell us why. Lenders may have to consider a rescue plan by Jet Airways employees as the bid deadline nears. PR Sanjay of Bloomberg News will bring us the exclusive, and the government may have to take some drastic measures to meet the fiscal deficit target. Nikunj Ori will tell us what the finance ministry is planning. Started with the market mood. Have you heard of the saying, sell in May and go away? I'm guessing you have. Well, market men seem to be following it that to the letter this year. That is, if you go by the trade in the first week of the month. Darshan Mehta is standing by to tell us how sharp and how wide this correction has been and what are the individual constituents out there. Darshan, how have you analyzed the anatomy of the market in the month of May?
Yeah, so basically, if you look at it, it's fallen for the 7th straight day. And as far as this month is concerned, it's fallen. At least 3 days, it's fallen more than 100 points. So there is negative traction as far as the Nifty is concerned. You can blame it on the weak numbers that have come out on the election front. You can blame it on global issues, global trade wars, because across the globe there is selling or probably a lot of election worries that are there. But the truth is that the Nifty has corrected significantly, almost 3.5% in the last in this month itself. So that's the trend you're seeing as far as the Nifty is concerned. In this month itself, the Nifty is down almost 3.8%, and it has underperformed the likes of the mid cap and the small cap end of the market, which have fallen equally. But usually when there is such a correction, is usually that the small cap and the mid cap, the broader markets out, they tend to, the underperformance is much higher at that end, but it's the Nifty which has actually fallen. The other part is how has the selling been across the world. So we're not alone which has seen selling. The issue is between the US and China, and the Chinese markets are down 9%, and despite putting on tariffs, the US markets are down 2%. We are somewhere in the between. We have fallen almost 4%. So we've managed to do better than some of the Asian peers, but not as good as the European and the American peers. So that's the selling, but it's broad-based selling across the globe. The other factor that we want to talk about is how have individual companies. That's something that we will talk about. So basically, that's what we want to talk about.
Yeah, Darshan, please take us. I mean, so one is what the markets by and large have done. Two is what individual constituents within the market have done.
Yeah, so we'll break it up into two. First of all, we'll tell you how much each stock has fallen, and then what has been the contribution as far as the stock is concerned. Now, basically, let's start with the Nifty. If you're looking at the Nifty itself, as far as this month is concerned, the Nifty is up. I think there's some mistake here, so we'll try to get this rectified because this is the one.
The contribution in the Nifty movement.
Yeah.
Yes.
So basically, if you're looking at the Nifty was down almost 415 points in this month itself. Almost 1/4 of it came in because of Reliance Industries. So Reliance was down almost 117 points, and these were the counters which rallied significantly. ICICI Bank contributed negatively 40 points. HDFC, Infosys, TCS. So the largest of the largest weights, they fell in significantly. They fell in also. And Reliance is down 10% this month. Only 5 stocks managed to gain on the Nifty in this month, and because of the low weightages that it had, hardly any point contribution. Even though Bharti Infratel managed to move up, Yes Bank was up significantly in trade, but that just contributed 1 point to the Nifty. So the weightage, heavyweight counters did manage to fall significantly. Similar is the case as far as the mid-cap end of the market is concerned. Federal Bank came out with decent set of numbers. So the Federal Bank was contributed 23 points. But look at the counters that have come. Escorts came out with weak set of numbers. That was down. GSPL will probably react to the numbers today. RECPFC have contributed negatively. So the high weight counters did manage to. Ajanta came out with good set of numbers. It was up almost 10% post the numbers. So that contributed a little positively. As far as the small cap index is concerned, let's take a look at the stocks which actually contributed negatively. Suzlon, despite being now a penny stock, has decent weightage, so that was down. That contributed 11 points downtick. NCC, IDFC, Indiabulls Real Estate, which had rallied last month, is down in trade. What contributed? DCM, Shriram, Raymond, Deepak Nitrite came out with good set of numbers. So these are the contributors as far as the Nifty is concerned.
Okay, Darshan, interesting movement, and the reason why we are not dwelling too much on what the reasons could be, because the reasons could be multifold. One is the global reasons, and two, the local reasons. The jitteriness that the market or the period of jitters that the market now seems to be entering as we head closer and closer to the D-Day in terms of the election verdict. But pretty interesting analysis of what's fallen and what's led the move downwards. The next thing on first word is State Bank of India, the country's largest lender by asset base, will report the March quarter earnings today. The public sector lender is expected to return to profit after the big loss incurred in the same period last year. Shefali Malik is standing by with what the markets are pricing in and some of the crucial items that we must watch out for. Shefali, what's anticipated? Good morning.
Good morning. So first, the net interest income figure, we are factoring in growth of about 19% and a profit figure of about 48-40 crore rupees. So even though on a YOY basis, it'll be a turnaround from a loss to profit, but last 2 quarters, they've been reporting profits. And it's interesting how after quarter, they've been reporting steady set of earnings or improvement. If you look at it, this last year, in some of the quarters, they were reporting slippages of as high as some 30,000 crore rupees in 1 quarter. From that level, they've actually managed to bring it down to an expectation of 8 to 10,000 crore rupees in this quarter. So that is the expectation for gross slippages. So they've been showing an improvement. However, in last couple of weeks or months, some of the new names have propped up, like the likes of Jet Airways. Has been going on, but the likelihood of now that account now coming in as an NPA has gone up, and we've already seen that one of the banks has already made prudent provisioning on the same, one of the private sector lenders. So how SBI classifies that account and what it does with the provisioning, that will be really important to look forward to. Also, some of the other names, ILNFS, they had already done some amount of provisioning on the same, on some 900 crore rupees worth of assets. ILNFS assets, they had classified that as NPAs in in the third quarter and made about 50% provisioning on the same. And on rest of the exposure of about 3,100 crore rupees to IL&FS, they had just done 15% provisioning. So that amount may go up in this quarter as well. So even though as analysts on the street are factoring in 8 to 10,000 crore rupees based on the guidance given by the management earlier for the full year slippages, however, there may be some negative surprise that may come in form of higher slippages or higher recognition of NPAs or some prudent provisioning. So that is always a swing factor for some of these lenders. It will be interesting to see how they deal with some of these names which have haunted the markets in last couple of months. Other than that, some of the operational metrics, their loan growth is expected to be around 11 to 12%, deposits growth around 8%, margins seen expanding marginally to about 2.92% versus 2.92 on a sequential basis, mainly led by higher MCLR and also higher recovery seen from the written off accounts. Other than that, it's generally a good quarter for from the other income perspective as well. So because of a lot of year-ending activities, so that will also be one figure to look forward to. But largely, the focus would be on whether the momentum that they've created in last 2 quarters in terms of reporting positive bottom line, so whether they actually maintain that in this quarter or not. That will be interesting to look forward to.
Okay. Thanks, Shefali, for bringing that to us. Just wondering though, this 8 to 10,000 crore slippages, even if the number becomes higher because they might prudently provision for an account like Jet or some of the others, will the street take that negatively, or will that also now be baked in the price? I can understand estimates of 8 to 10 may not have included Jet, but if Jet comes in and if the numbers go up, or some other accounts come in and the numbers go up, the market would probably not be disappointed because that would be considered prudent.
That will be considered prudent, just like we saw in the case of ICICI Bank, but it really depends. For instance, in the case of one of the other banks, we saw that the ADAG exposure was much higher than what the street was factoring in. If something like that happens, then that will really be a red mark. But considering that that's a private lender, this is SBI, so it really depends.
I hope not. But okay, point taken. Thanks so much, Shefali, for putting that into perspective. That's Shefali Malik with what to expect from State Bank of India. And keep in mind, when the numbers come out, she'll be here to tell us all about how the numbers are looking like. Remember, the gross slippages numbers come out a bit later on. So when you're analyzing and trying to trade SBI numbers, you got to keep that at the back of your mind. But let's stay with earnings. Shankara Buildings numbers look worrying at first sight. The top line and bottom line have taken a severe hit in the fourth quarter. But one look beyond the broad numbers will show you that the company's balance sheet is actually showing signs of some improvement. Sumit Sarkar is here to take us through those details. Sumit, 92% drop. How are you finding a silver lining in this?
Well, I'll come to the silver lining early, at a later stage, but I'll first take you through the earnings, how they have been in the fourth quarter. Now, compared to last year, if you see the consolidated basis, the company's revenues were down nearly 19% to close to 620 crore rupees. The EBITDA fell by nearly 70% to close to 16 crore rupees. Margins contracted to 2.6%, while the net profit fell nearly 93% to close to 1.6 crore rupees in the fourth quarter of financial year 2019. Now, if you see the segment-wise breakup for Shankara Building, you can clearly see the pain has been coming from the channel and enterprise segment of the company, where the revenues have declined nearly 30%, EBIT has declined by nearly 90%, and margins have contracted to EBIT margins have contracted to 0.9% in the fourth quarter of financial year 2019. So what led to this weak earnings? Well, it was lower sales and higher cost of materials, because of which the earnings of the company have fallen in the fourth quarter. Now, in the total material cost, we are including the cost of material consumed, the purchase of stocks of material, and the changes in inventory, which increased to around 91% to the percentage of sales compared to what it was 86.6% in the last year. So because of this higher total material cost, the company's earnings have fallen in the fourth quarter. However, some of these negatives were offset by lower other expenses, higher other income, and a tax credit that the company received in the fourth quarter. Now, other expenses were down by nearly 24% to close to 25 crore rupees, while other income jumped nearly 16 times to close to 2.2 crore rupees in the fourth quarter of financial year 2019. So what to make out of this earnings? Now, if you see, the fall in earnings is because the company had earlier changed its strategy to focus more on cash sales over credit sales. Now, this is what has led to lower sales in the fourth quarter and has weighed on the overall margins of the company. However, if you see, for FY19, the EBITDA margins of the company are in line with what the company had given a guidance in after the second quarter earnings. It was around 4.5 to 5%. That was the company guidance. And if you see the FY19 EBITDA margins, they have come in at around 4.5%. Also, the focus on more cash sales has led to a healthy balance sheet for the company, because if you see the company's trade receivables, they have come down by nearly 21% to close to 330 crore rupees, while the trade payables have also come down by nearly 17% to close to 380 crore rupees. The company's inventory levels are also down by nearly 8%, close to 383 crore rupees. So this in turn has reduced the working capital cycle of Shankara Building in the fourth quarter and for the financial year 2019. So that is one positive point that has come out from these earnings. Along with that, if you see the company's cash balance, that has increased by nearly 191% to close to 17.5 crore, while its total debt has also come down by nearly 20% to close to 195 crore rupees in the fourth quarter of financial year 2019. So lower sales is one negative point that has come out from these earnings, but overall if you see, the quality of earnings has improved because the balance sheet of Shankara Building has become healthy in the fourth quarter of financial year 2019.
Okay, so that's the silver lining. Sumit, thanks so much for putting that into perspective. It's a stock that's been beaten down so badly that silver linings might be considered well. Let's wait and watch. 3 months though, it's recouped a bit of those losses. But if you look at the last 1 year performance of Shankara Building Products, it's been whipped out of shape. 74% downtake for Shankara Building over the last 12-month period. The next stock is Jet Airways. In focus, of the companies in focus really. Employees of Jet Airways are stitching together a bid to save the airline, and lenders may hear them out if the investors who express interest do not submit binding offers. PR Sanjay of Bloomberg News joins us with that exclusive. Sanjay, good morning to you. Can you explain this piece to us?
Yeah, so it is very interesting, bid proposal has come from, a group of, pilots-led, bidding. So this is if you recall in 1994, there was similar issue when United Airlines had similar problem. Employees had come together to bid, and they were successful in turning around the company also. So a group of employees led by senior pilots who were actually flying A330 of Jet has come together and put out a proposal, and they claim that they have found an investor who are willing to invest at least 3,000 crore, and they are saying that they are in short of at least $250 million, and if they were allowed to bid, they could find another investor who can match that, and they can turn around the company. And when they approached SBI Caps categorically said that they can't entertain this bid at this point of time, but if there are no bidders after the deadline over for binding bids, they could be entertained. So they were asked to wait, and in case if there are no bidders, SBI Caps may permit them to, or they will evaluate what are the options, or whether it is feasible, this is viable. So by today after 6 p.m., if there are no bids, this pilot-led or employee-led, bid could be entertained, and I don't know whether it could lead to another, successful employee-led turnarounds like in the case of United Airlines in 1994. But it's very interesting bit from employee side.
Quite a parallel, Sanjay, that could happen. Just one small question though, Sanjay. Even if there is a bid that comes before 6 p.m. today, would the lead lenders or the bankers compare the bid that comes in to the proposed bid by the pilots? Or if a bid comes in, then the time to submit the bid having gone, no matter how good the pilot's bid might be, it will not be entertained?
So the first priority for, when we spoke to SBI Caps and SBI, they were saying that the first priority will go to a proper binding bid submitted by the, suitors who are, who were experienced in structuring, structuring and restructuring company for that matter. Etihad, who has been existing equity partner with 24% stake. So they would be normally, preferring such kind of bids. But if you recall, in the past instances where 4 bidders were, bought EUI, and nobody were actually accessing the financial room for data. So which is not giving a great sign. So they were hopeful someone will come and submit a binding bid. In case if there is not there, the second priority, the preference will go to the bid which is being stitched together by the pilots for the grounded airline, Jet Airways.
Okay, Sanjay, very interesting, and I'm sure you will monitor this, and we will try and keep ourselves updated on this piece of news as well. Very interesting, that development. Thanks so much for bringing that to us.
Thank you.
That's PR Sanjay of Bloomberg News. with this very interesting story. Let's wait and watch. Now you know that even if there are no bids that come in, there's a group of pilots who want to bid for the airline. Let's see if that turns out to be positive for the stock in today's session. 147 is where Jet is trading currently. The last piece on First Word today, Arun Jaitley committed to stick to a 3.4% fiscal deficit number for the last financial year. But a shortfall in the direct tax collection numbers means that the finance ministry will have to take some drastic measures to help the minister honor his commitment. Nikunj Ohri, who's spoken to various government officials, reports.
The government may have cut its expenditure by about 1 lakh crore rupees in FY19 to meet its fiscal deficit target due to shortfall in tax revenues. The government has seen or witnessed a shortfall of about 1.6 lakh crore rupees in both direct and indirect taxes, and for the government to meet its fiscal deficit target of 3.4% of the GDP, the government would have cut its expenditure in the previous financial year and would have rerouted or adjusted its unutilized fund which was allocated to various departments or other government ministries. On the direct tax side, the government has managed to achieve 11.38 lakh crore rupees in direct tax collections against the direct tax collection target of 12 lakh crore rupees for FY19. Remember, the government had revised its direct tax collection target by 50,000 crore rupees, anticipating better corporate tax collections. So the government has managed to meet about 99% of its corporate direct tax collection target, but there's been a shortfall in the personal income tax collections, and the reason for this is that the government had given itself an ambitious growth target in personal income tax, keeping under consideration the higher growth post demonetization years. So now there's been a shortfall of about 62,000 crore rupees in direct tax collection targets. On the indirect tax collection side, the government has again missed its target, and the CGST collections were about 4.6 lakh crore rupees in FY19 against the target of 5 lakh crore rupees. On the customs collection side, the government has managed to meet its target of 1.3 lakh crore rupees and has seen higher collections in the compensation cess fund as well. But the overall shortfall in the direct tax collection target is of 10% and of the targeted 10.45 lakh crore rupees in indirect tax collections.
It's a challenge. Let's see how they come up on the other side. That's all that we have on First Word today. There are lots more lined up on Indian Open. What do charts say about the pullback in Indian markets ahead of the elections? We speak to JC Parrots of allstarcharts.com, discuss the factors behind consumption slowdown with industry veteran Vinita Bali. But after this break, a full tilt towards the day's trade.